Right. Welcome to Assets and Algorithms, the show where we explore the intersection of real estate and technology. Today, I have my guest, Matthew Owens from OCG Properties. Thanks for joining today, Matt.
Thanks, man. Appreciate it. Looking forward to the conversation.
Absolutely, me too. I'm excited about this one. So I want to jump right in and just ask you to tell us a little bit about your background and how it fits into the bigger picture over there at OCG.
Yeah, no worries, man. So, just to give a little background, I'm a CPA. I live in Southern California. I have a couple of kids that are, younger right now, and I'm trying to spend more time with them and do less real estate, and try to automate every part of my life if possible. I actually quit my CPA firm job in 2006. We were doing audit and tax work and a lot of that type of work for smaller companies. And I grew up in Southern California and quit my job to go into real estate when I got my first deal under contract. And you really never looked back. I was tired of spending my time and trading my time for money, and really wanted to be able to build assets and create, freedom. And I really didn't know what I wanted to do. I knew I didn't want to become a CPA. I was like, should I go open a bar? What should I do? Like how do you make money, right? And took
Right.
some real estate classes and was immediately drawn to it. My attention was immediately focused on it. I think ever since then, my learning curve has been through the roof, so consistently. It's a great problem to have, I'd say. But I quit in '06, went into real estate, was a real estate genius for about a year and a half before I got my butt handed to me and punched on the market by the crash that occurred then. But since then, we flipped a little bit over 1,000 houses. We've raised a little bit over $150 million. We have about 35 million lent out to flippers in different markets around the country. We do a lot of multifamily housing, mobile home parks, self-storage, debt investment strategies. We invest in other private businesses and do different investments in different ways, and really just try to help people create financial freedom through real estate and investing, and help them with the tax mitigation side, and try to be a resource to people that need that resource. So it's a lot more fun than doing accounting and doing that work as a CPA firm. There was instances where, going to work, I'm like, I just want to cry. I can't do this anymore. It's so boring. Like, this is just shoot me. But it's, at the same time now, I love that stuff because I'm finding ways to not pay the government money, so
Absolutely.
and learning that for myself, right? So whenever that happens and it affects your own pocketbook, all of a sudden you pay attention. And I tell people I graduated with a degree in economics with an emphasis in accounting from UC Santa Barbara, but actually became an economist in 2008 when everything crashed. And I was like, oh, I better pay attention to this now. This stuff is important, So that's when
Absolutely.
you really realize, oh, one big mistake because of something a lot of people did see coming, with the writing on the
Hmm.
wall there. And, I thought at the time, oh, no, you could have never seen this coming, but the data was there, right? So if you pay attention to it, you can hopefully avoid some things in the future. Not all events you're ever going to be able to avoid, but you can also
Right.
put yourself in the right position to protect yourself, right? Have low
Hmm.
leverage ratios, have a lot of capital, and diversify your investments, those types of things to mitigate some of those risks, right? So that's my story.
Absolutely.
That's the fun that I've had. And I remember quitting my CPA firm job thinking, I'm going to have all extra time to go to the gym now and, have all this time to myself. And yeah, 14-hour days later, that it's
Yeah.
fine. You own your own business now. Wake up, So
Absolutely. It sounds like you've been on a wonderful journey. Congratulations on all the success. It sounds like also you've been able to scale massively, which is amazing. So I really want to ask you about what systems or processes that you've been using and have been most critical to enable your growth.
So I'd like to say fear is probably one of the biggest things. Like, keep pushing because you have no choice and you better grind, right? So look, there's that work ethic part of this and the grit that you have to have in this business. In any business, you really have to have that grit because you're gonna fail, you're gonna get punched in the face. That issue that I had in 2008 was not the only time that I've taken hits, stolen from contractors. I've had partners of mine steal from me. I've dealt with all kinds of different headaches and trials and tribulations. After flipping 1,000 houses, I know 1,000 ways to lose money on a house, if you needed to,
Mhm.
right? So I think, one of the biggest things that people don't understand, I know you talked about this, you're talking about the systems, and I'll get to that, but I think the first step is you have to have the grit and know that you're going to have problems and know that you can push through those things in order to push yourself to where you think you should be, right? And always overestimating where you think you should be, right? If I think, hey, I want, if I really, really want to have, 100 grand a month of passive income coming in from my investments, then let me shoot for $1 million a month. And that's what my goal is going to be. And one of the biggest parts of that system is understanding where that goal is in the first place, and then being able to outline that system and how you're going to get there. What are the steps in that process and the milestones to get to that point at some point in the future where you're going to be? And one of the biggest books that we had implemented was Traction, and it's the Entrepreneur Operating System. So I highly recommend reviewing that book, reading it, implementing that into your business as well, because it's what sets the tone for scale in the first place. Because you're saying, I don't want to be barely breaking even and, covering my expenses every month. Yes, that's what my initial goal is, but what's the point of all this, right? Is this, I want this up here. Let me focus on how do I get there, and what are the steps in the next 5 years that I have to achieve to get to my 10-year goal? What are the next steps in the next 3 years, 2 years, 1 year, 6 months, 3 months, month, week, and break that down into activities to get to that end goal. And that's, how we honestly started scaling, like, doing 10 houses a month consistently for a period of time to get to 1,000 houses, and doing a massive amount of lending as well, and getting to that level, right? And once you get to that scale, it actually becomes easier because you can have the right people in the right seats to do that. You still have to learn that piece, which is the key to most entrepreneurship, is learning how to delegate and how to set up the right processes, the checks and balances, and things that go into each segment of your business, and realizing that it's not just about, let me buy a house and fix and flip it and get this thing sold and I'll make X amount of profit on this one house. It's who's going to be the contractor, who's going to be the construction manager, who's going to do the accounting, who's going to do the marketing, who's going to do the sales, like every aspect. Who's the team member and what are their processes to follow on that one particular asset? And then how do you scale from there, right? So that understanding comes before like all the other like tools that you would implement to do this, right? Like some of the tools that we implement, we use Monday.com. It has a really good operating system from an asset management component, because from our standpoint, we don't just fix and flip, but we're also lending, we're also doing multifamilies and mobile home parks and other businesses. And so how do you go through and set up the right processes and reoccurring tasks within each one of those businesses and the asset management component? You got the acquisition side, but you also have the long term. How do I manage this asset? How is my property managers managed correctly? How am I making sure that I'm hitting my financial projections? How do I make sure every aspect of that, one particular asset is really as efficient as possible, and then reviewed consistently for better efficiencies and automations and, consistency there, right? So that's a lot to do with your processes and the documentation of those processes with each individual small asset class or each thing that you're doing. So if you're just starting out and you're like, how do I scale to flip a bunch of houses like this, which I wouldn't necessarily recommend. It's not easy. It's like I tell her to like Bruce Lee, where you use 1,000 kicks. You took that long than going through pain of 1,000 houses of pain to like get to that point where you're a specialist at a topic, right? And the first thing is that take one asset and document the start to finish, entire process and end-to-end revenue generation strategy there, to be able to say what activities get done when you're, for example, trying to find a property to buy, right? What are the metrics? What's the analysis? How do you estimate the renovation? All the little pieces that go into that up front. Who's going to talk to the people? How are you going to get it under contract? Are you going to walk that through the close of escrow to make sure it closes and make sure that you're set up for the next renovation stage after that? And then after that, you're set up for either the handoff to property management or the final quality control, then handoff to management or sale to an agent. And then the process that you want the agent to follow during that process of the sale. So documenting this whole thing like this on a smaller scale enables you to like blow it up into a much bigger scale once you get the widgets handled, and all that. But we use Monday.com, we use, Dropbox, we use a lot of different tech out there, but it's really the processes that you want to be following to like get to that scaling component method. And AI now makes it much more easy to document your processes, and you can record your screen and literally it can document the whole thing for you. You can do meetings now where automatically you get all of your meetings notes and everything in your task list and punch list just spit out for you. So you're like, here you go. Now I'm just trying to take those meeting notes and get them right into my, reoccurring task software, instead of having someone manually do that for us, right? And put that in. But it's use the system, to make sure. These are some of the things that we do from a scaling standpoint.
That was a great answer. I love the book recommendation. Traction is a really, really good book. A lot of great value in there. You talked a lot about some of the flips that you guys have been doing, the lending, the mobile home parks. I want to pivot a little bit into the passive income goals, and some of the messaging that you have and you push forward in that angle. Which strategies have you found most effective in building and maintaining those passive income streams?
Well, it's definitely not flipping, okay? Because flipping is an active business, and that's you can set that up so that it can be passive, but it's really not passive. It's a lot of work. There's a lot of problems that go into that. It's like owning a property management company. You're just buying problems, so to
Right.
deal with, right? And so you can automate a lot of that piece to create some passive aspects of it, but at the end of the day, it's not as easy to create as a passive investment. I really like investing in two different or multiple strategies, right? I invest personally in gold, silver, and some commodities, which are not necessarily cash flow related, but I look at those as an insurance policy in
Right.
case other aspects of what I'm doing fail or don't create enough income or don't perform, right? Or there's a change in the market or something like that. On the other side, from a passive cash flow standpoint, I invest in debt. I invest in property or equity, and then I also invest in other outside businesses that are not necessarily related to real estate.
Mm.
And so I like the debt structure because you can lend against assets that maybe are at 65% of the value of those properties. If you're into being a hard money lender or a company where you're lending money, and still be able to create a consistent long-term cash flow stream as long as you're pooling that cash flow together. We create funds for these types of things where we can get 70 to 100 houses at a time in a pool, and so it mitigates the risk massively of any one deal failing or any couple of deals failing there, from that perspective. And now you get a much more consistent cash flow stream. You don't get any tax
Hmm.
benefits. You don't get any, I'll say inflation hedges with debt, but you get that consistency to cover your monthly expenses to retire off of and, make sure that you're covered no matter what, even if you lost your job. On the other side of things, I invest in real estate, whether that's mobile home parks or multifamily or single families or other strategies and self-storage and other strategies like that. And I do that in a number of ways. I invest directly, so I completely control that asset and can make decisions with that asset. And I also invest indirectly, where I'm a passive investor in other people's deals like that as well, and usually through syndications where I can put up 50 or $100,000, and I don't have to qualify for the financing. I don't have to go through and put up, all the money for the deal, which could be millions. I have investments in 400 unit Class A apartment buildings and Class B apartment buildings run by operators that have done over 25,000 apartment units. I also own some smaller multifamilies and things like that myself fully as well that I've operated, I've renovated, and you can, in both strategies, you can add value and force appreciation by doing renovations and increasing rents and decreasing expenses, which is a great strategy to not only increase your cash flow return, but also increase your equity buffer so that if there's any volatility in the market, you're much more protected, right? And you can still
Mm.
exit that asset, right? And then you're looking at an inflation hedge. We front load the tax benefits onto those into year one and do what's called a cost segregation study, which basically allows you to do bonus depreciation on a big chunk of your building, right? On your
Mm.
purchase price. And so, especially when you are leveraging that deal, you're getting the bonus depreciation off of the value you're paying for it versus
Hmm.
your down payment might be 30% or something like that, or 40% of the actual overall investment investment in the first place on like a multifamily or something like that, right? So you can get a much bigger bang for your buck on a big tax deduction in year one. So we use these for forced depreciation, inflation hedges, decimating debt due to that inflation and holding long-term debt and getting 30-year fixed rate mortgages in place on rentals and things like that. And then we buy properties every single year to get tax deductions on top of that, right? And then
Mm-hmm.
we have the interest income from from the note side over here coming in for that more consistent cash flow. While usually in the beginning on the real estate side, it's a slow, steady trickle of cash flow in the beginning, if any, while you're doing a value add, and then it
Mm-hmm.
picks up later on in future years. But most of your money is further on down the line versus because you're just waiting for that, continual increase in inflation along with rents to rise over time and things like that, which really, make your return great over the long run versus the cash flow now. So these are the strategies that I juggle back and forth and utilize. And I also show my investors how to do this. And we help them with 1031 exchange replacement properties. A lot of times we do joint ventures with investors. A lot of times where we'll buy it and renovate it and put it up and running. And we'll have our investors put the down payment down on individual assets as well as within syndications. So I also do some crazy things like I invest in accounts receivable financing. I bought a marijuana farm. Like there's like some crazy things we've done that, actually, go through trials and tribulations on some of those strategies too, because they're different business strategies that you have to learn to implement the right procedures for that particular business. So, but it's a great way to diversify and get that cash flow without, if you just invested in multifamily value add, great, but you're going to be lacking on cash flow in the beginning versus investing in both of these, right? So
I love that answer. I think a few things you mentioned there as far as partnerships and investing in alternative investments, or small businesses, that cash flow, all of that is really great information for people to explore. Also, something you mentioned is downturns, right? In the market, you talked a little bit about your experience during the '08 collapse. And right now we're dealing with some market challenges and some fluctuations in the market. What approach would you say you've taken or someone could take to maintain stability and continue growth in times like that?
So I think one of the number one things is have excess cash on hand, right? Don't overinvest and over deploy your own capital. If you need capital yourself, if you need to retain that, then you should utilize other people's capital and learn how to raise capital for your projects. If you want to continue to grow and buy assets, you want to make sure that you have a reserve, not only for your business, but also personally, and you have those separated and have a budget put in place for these things. I utilize Monarch Money. I think it's a great strategy to utilize. There's a lot of these types of softwares out there that can teach you and help you manage your money from a personal standpoint, and then making sure you know what your budget is and what your actual is on your business standpoint, and that you have proper reserves for your business and personal. So you have your buckets of capital that are needed, and then you have your emergency money sitting aside. Then anything else you invest, right? So then you're having proper capital reserves and maybe even some additional capital reserves for any changes in the market that are sudden, so you can pounce on something and an opportunity that comes up to be able to have that available. Yeah, you're going to have some opportunity cost on not investing that funds, but having some funds sitting aside to say, wow, that's great. Let's grab that one really quick. Or let's, oil goes down to zero again or negative. Let's grab some of that immediately, So it's like,
Right.
dang, you see this happening, but you're going, if you don't have cash, you can't take advantage of it, right? So that's one thing, is having some heavy cash positions. I also think that having lower leverage ratios than you normally would have is highly valuable, because you can
Mm.
weather the storm on your real estate in that situation. So if you can refinance at 80% of market value in some cases, that doesn't mean you necessarily should, right? You should be hitting what's called a debt service coverage ratio of at least 1.25%, meaning you're going to, on your cash flow, it's going to cover your debt payment by basically 125% or 25% more than what your debt payment is in the first place at a minimum. I even think you should be bumping that to 135 or 150 to manage any potential downside risk. What happens if rents drop by 20%, right?
Mm.
Which can happen, right? All of a sudden, rents are very unaffordable right now. Depends on the market that you're in, the oversaturation. We're not seeing a major volatility there right now, but it does happen. What happens if that
Hmm.
happens At the same time that we're seeing 15% inflation occur in the market on your property taxes, your insurance, your repairs and service calls, your labor time, your property management, all these things could go up while your rents are dropping. And so where is your break even on your particular asset if that black swan event happens to occur, which I don't know that it's necessarily a black swan because we can kind of see that potentially coming. At some
Right.
point, we know rents are going to drop. And I don't know about you, but I don't really think there's much room for inflation to go down or deflation to occur when we have pending wars. They're trying to refinance the debt right now on like trillions of dollars worth of debt at much higher
Hmm.
rates. You know, that we have tariffs occurring and stuff like that that's going to be inflationary. You know, they have no real incentive here. We're still at a deficit of $2 trillion a year. So unless some of these major factors get fixed, we're going to have inflation. So hold assets long term if you can and just hold on to them because, I did the math and I say this in multiple podcasts that I've been on, but if I did the math, if I would have held that 1,000 houses and I have over $50 million right now, and
Hmm.
you're just like, oh, just punch it, but you're like one move, just changing it up. So,
Hmm.
and, but it's interesting when, trying to mitigate risk and not take punches in the face along the way, but then also realize that you're going to take punches in the face along the way. And you
Right.
have to be mentally ready for it because if not, your mindset can falter and your mindset has more to do with your success than anything. And it's because when you're negative, you have a harder time of solving problems than when you're like focused on solving the problem and being positive about this could work. If you just brainstorm on 10 ways to solve a problem and write them down, they're like, well, there are options. Let me focus on all of them and one's going to hit. So, and do that. And it reduces your stress and takes you away from that negativity. There's multiple instances where I've took hits in the past that I thought it was going to ruin me. And you realize, wow, actually, like I'm 10 times stronger because of the way I reacted out of this. And, I had a contractor steal 500 grand from us and I was able to wipe it off my shoulder emotionally, even I'll say after 3 or 4 days of being mopey, about that,
Hmm.
but I was able to say, okay, let's focus on the opportunity and like, how do I never let this make sure this never happens again? And then how do I make sure that I can make this money back right now? And I actually found ways of doing that, which is insane. So we have some really cool things going on right now with the business and, financing arrangements and all that kind of stuff that is exciting, so you got to get stronger is what it does.
Absolutely, absolutely. Those challenges will, if they do nothing else, they'll make you stronger. They'll
Yeah.
help you persevere and overcome those other challenges that are bound to come up later in the future.
But you
Um,
might wake up at 3:30 in the morning needing to meditate, you get through it.
Absolutely. So I want to ask you really quickly before we wrap this up about your future outlook, right? We talked a little bit about some of the tools you guys are using and some of the ways that AI is being really impactful for the real estate market. I want to dive into what you think the future looks like with AI and real estate and how you guys, intend to leverage it moving forward.
Every single way possible, we're going to leverage it. And it's exciting to buy my time back to spend more time with my kids. Like I have younger kids now, and they are beating me up nonstop, jumping on daddy. I'm just the beat up toy. My son is 10 and my daughter is 7. I say he beats me up physically and she beats me up emotionally. But lately she's been beating me up physically also. So there's nothing I can do about it. She just, whatever, just beat up daddy. It's nonstop. But, at the end of the day, what we're doing is a number of things, and it depends on the categories of your business, right? You have accounting functionality, right? Where you can actually come in and automate a lot of these transactions now. You're able to go through and create CFO dashboards where you can get all your data in one place. The integration of technology into this is really awesome, and AI can actually help that even more to be able to download all your financial data for all of your projects and everything and pull out data out of it as well as one potential way. Just the information that you can get out of this about your business as a whole from a financial standpoint is pretty cool. It takes some training, takes some implementation, and takes a lot of time. And not everything is going to be perfect and stick where you think it's going to save you time. Some of it's going to be a little bit of a time waste while you learn this structure. It's a matter of focusing what is going to save me 5 hours a week or 10 hours a week in every aspect of my business, from the accounting side to the marketing side to the operations and asset management components of different businesses that you're running. And if you have a lending business, we have three different types of lending that we do on accounts. We do accounts receivable financing, mobile home financing, and hard money lending to flippers. And so like there's different processes that go with each one of those particular businesses. And there's different automations that can be done in those ways, like follow-up servicing on servicing and follow-up emails to people, right? We utilize Monday.com as a simple thing, as a simple software we use. And that's not even necessarily AI. It's just software development, but it can all be kind of grouped together because it's all kind of getting integrated together into these spaces, right? We utilize videos like this nonstop to do trainings that automatically create punch lists and automatically create processes, and can go through and document trainings where we can create training manuals and create videos that go with these things with the processes as well, and document things for training for employees, right? On the marketing side, we can get shorts like that. We can get content like that now. Some of it sounds a little AI-ish, I'll say, as far as, and you need your own personality, but I've had friends of mine that have uploaded all their old content into an AI, into different GPTs, and created bots of themselves, and have gone through and now can create content in their own language, in their own voice and wording that they normally do right there, where it can write blogs and content for you nonstop, right? You can have it write email sequences for a launch to a deal, right? Or a launch to when you're raising capital for a deal. You can launch trainings in this way and do consistent trainings. There's so many things on the marketing side that you can do. We even go through and can comment on other people's posts sometimes with now, which sounds a little AI-ish. I think in one instance it's like, oh, I really love that song. I'm like, I've never heard of the song in my life. I don't know what the heck I was thinking, but you got to upload it with your personality, I think, too. So, but there's so much you can do from an efficiency standpoint, and it depends on the different segments of your business of what you can implement. And, you know, we're still in the learning stages of this and always interested in more education on this topic, because if it saves us time, automates, saves us money, just the follow-up systems. If you think about a property management company or something like that, and they need to follow up with tenants, and they need to follow up with homeowners, and they need to follow up on repairs and service calls, getting documentation from contractors and their team. There's so many ways that can be automated on these little aspects of every piece of every business, right? You just got to look at your business and say, let me list out all my reoccurring tasks. What things costing my team and us the most amount of money? And then is there a way to find a way to automate that piece, or a big chunk of it, or half of it, right? So by doing that, and that is key. Even emails now, you know, you see the emails that you can have AI write, which you really got to upload with your own language, because half of it is like, I think one of them did one for me in like a UK language or something like that, or like a different dialect kind of thing of English. And I was like, what the heck is this? This is weird, you know? So I'm like, I don't speak like this. Speak like you listen to hip hop when you grew up, like myself, you know? So
Absolutely. Listen, man, I get you. It's definitely exciting. I think you pinpointed a ton of ways that people can use it in their business and their everyday life, and you touched on some of the ways that people can make it better. I think that's going to be very important moving
right.
forward. It's been a great conversation, Matt. I really appreciate all the insights you provided and all the jewels that you were able to drop. Let people know where they can reach out to you, where they can find you if they want to invest with you, if they want to learn from you. Where can they reach you?
Yeah, they can just go to my website, MatthewOwens.com, and that's one T in Matthew, and my parents couldn't spell, so that's MathewOwens.com. My parents could spell. They were just CPAs and engineers, but I just say that because I have to explain my name every time. It's hilarious. But if anybody wants to go to that site, they can actually download. We have a 200-point due diligence checklist that we use for all of our different due diligence on our deals. We have quick analysis sheets on how to analyze properties. We got master classes on how to raise money, all for free for people. So that's MatthewOwens.com. So thanks so much, man.
No problem, man. Thank you. I appreciate you taking the time. And this has been another episode of Assets and Algorithms.